Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market after an exciting couple of days with a lot of volatility in both directions. So just want to give a little insight and review in how we headed into Friday, because it was a very clear setup in terms of what we were looking for, and it played out really nicely. So when we headed into the morning on Friday, we saw the bounce at the end of the day on Thursday, and we head into Friday saying, all right, do we see bounce continuation, or do we see a lower high set on the hourly and we fade back down to our support levels? So that's the premise, and that's what our mindset is as we head into trading on Friday morning. So then we say, all right, Friday morning we have a reaction to the jobs numbers, and we see some big upper wick. So okay, that's continuation, but we now have a clear range pre-market to be watching with all that volatility. So we look at the range from pre-market, and then we head into the open. So we had our high and low. That is our range to be watching. If we break the high of the initial reaction to the jobs numbers, it's bullish. If we break the low, it's bearish. So then as we were heading into the open, we were looking for the likelihood that a lower high would be set, and it was. And then the bell rang here at 9:30. So there we are. There's our ranges, and we're saying, okay, we have a higher low and a lower high now, essentially a double top. And if we break bullish, we look for bounce continuation and we play bullish. And if we break bearish, we look for bear plays as we head back to the lows from Thursday. So we then had another rejection and another rejection. We had quadruple tops at our resistance from pre-market. We could not break those levels, and then we lost the higher lows. As soon as 289.44 broke, that was bear signal number one. If you were patient and waited for another lower high and lower low, the signal was 289.15. And if you are most patient, you wait for a new low of pre-market breaking 288.74. In any way you play it, we get significant follow through and significant bearish downside on that move. So every individual name then, as soon as we broke that level bearish, said, all right, we're looking back down to the lows of Friday. From that point, I was focused on the tech sector, QQQ and XLK. Can they hold their low of Friday? In the end, they could not. We broke to lower lows. That only added to the momentum and the confidence of the bears, and we had a nice bearish day. That being said, we did see a bounce in the afternoon. By that point in time, I was done trading for the day, made all the gains in the morning on the way down, and didn't feel like sitting in front of the computer anymore. But where does that make us stand now on SPY's daily chart? Again, significant pullback, and the weekly uptrend is now at risk. So this is significant enough pullback that best case scenario for the bulls when we do see a bounce is for a lower high to form. So we're going to look for a bounce and a lower high. And the question from there is it an equilibrium? Can we see enough of a bounce that we form an equilibrium and tightening range? Or is it just a lower high and lower low? If it's a weaker bounce that does not get as high, it will favor continuation down. So we need an hourly trend change to indicate that our bounce is underway. We ended Friday with the same kind of bounce that we had at the end of Thursday, so the bounce is not clearly underway yet at this point. All it is cooling off oversold hourly levels, and we could see further weakness into Monday morning. So we're going to have the same game plan. High of the bounce attempt will be a key resistance Monday morning. We'll see how the pre-market reacts to that price, and we'll either be looking for a higher low and continuation, or fading right back down to the lows with the bears keeping control. IWM on the daily chart, significant weakness, lowest price in over 3 months and dumping. The daily chart is now oversold. The daily lower Bollinger Band is resistance. So we can look at the hourly time frame here as well and say, has the bounce gotten started? And it has, in the same way that it did Thursday night or Thursday afternoon. Same thing. We have to see a higher low and then a bull break and change of trend on the hourly to see any kind of bounce on the daily begin. Otherwise, it's just a lower high and lower low pattern. So looking at the weekly chart, IWM has significantly taken out support levels. And at this point, we're hitting the lowest price that we've seen since back here in May. So about 4 or 5 month lows, definitely noteworthy, big spike in bear volume. And again, the size of the pullback now, when we do bounce, we're just going to be looking for a weekly lower high to form on IWM and a daily lower high as well. The last daily lower high was up at 166.73. That's a bit of a ways away from where we currently stand. QQQ, significant volume and weakness. A 2-day all-out dump. We broke a lot of supports. The daily uptrend has been lost. The next support after 178.43 is down at 177.80. Weekly time frame, is losing some support levels, lowest price in a month. Middle Bollinger Band is still holding. QQQ definitely looking the best here. Let's look at SPY on the weekly, actually. So QQQ and SPY are very similar here. And SPY is the potential to lose these exponential supports for the first time in about 3-4 months. So that would be notable as well. And we would look to test the weekly Middle Bollinger Band if we do get follow through. QQQ is in the same standpoint. We're already at the Middle Bollinger Band, however, and we are at risk of losing the uptrend. We have the bearish MACD cross. So this weakness may just be getting started for the tech sector. We're going to be watching for clues every single day. Bearish engulfing candlestick on the weekly chart, definitely notable. And we look at XLF. XLF may have topped out and formed our daily lower high. Because of the size of the pullback, we were absolutely anticipating a daily lower high to form. And now if we continue to pull back and break 27.92, we're heading back down. To change the trend on the daily, we need the higher low compared to 27.47 and then bullish continuation. Otherwise, if we just fade right back down and break 27.47, it's a clear bear break and the bears keep control. Weekly time frame for XLF, trying to hold on, really losing momentum with the market to a certain degree. And VIX with the big bull move, nice follow through for the second day in a row. And again, the Bollinger Bands on the weekly time frame got tight. We're still rejecting from that upper Bollinger Band with profit taking at the end of the day. Again, we're seeing big upper wicks due to the market bulls buying the dips at the end of the day 2 days in a row. But we're still keeping an eye on it because we did break to the highest price in over 3 months. And the next resistance level after 1736, we're looking up at 1808 and 1961. So bulls really want to get over this upper Bollinger Band. That's when things get aggressive for this volatility index. And watching next week. So that's where we stand. Again, the same game plan pre-market with SPY that we were at Friday morning. And it's all a question about whether the hourly oversold bounce is for real with a higher low and higher high, or if we're fading right back down to test lows again. Hope you have a good weekend. We'll see you soon.